If you checked the financial markets this morning, you just witnessed something that hasn't happened in over 50 years. You saw America's closest ally make a decision that could bring down the entire global financial system. You saw the beginning of what economists are going to call the Great Unraveling. I'm talking about Japan, not China, not Russia, not some enemy nation we've been fighting for decades. Japan, the country we rebuilt after World War II, the country we protect with our military, the country that is supposed to be our partner, just dumped over $1.2 trillion in US debt onto the market. And here's what nobody's telling you. This isn't about trade. This isn't about tariffs. This is about survival. Japan is drowning, and they just grabbed onto America's shoulders to keep their head above water. And when they do that, we both go under. By the end of this video, you're going to understand exactly what Japan just did, why they had no choice, how this triggers a chain reaction that ends with your savings getting destroyed, and most importantly, what you need to do in the next 72 hours before this gets exponentially worse. Because what happened on January 9th, 2026 wasn't just a policy decision, it was the global kill switch being activated. And most Americans have absolutely no idea. So pay attention, because this is the most important financial event of your lifetime. The moment everything changed. Let me take you back to exactly when this happened, because the timing tells you everything. January 9th, 2026, 8:47 p.m. Eastern Time. Most Americans are watching TV or getting ready for bed. The markets are closed. Nobody's paying attention. That's when the Bank of Japan released a statement, not a press conference, not a televised announcement, just a PDF document on their website in Japanese, with a delayed English translation that came out an hour later. The statement said they were exploring options to stabilize the yen. If you don't speak central bank language, let me translate. That's code for we're about to do something that will shock the markets. And within 90 minutes, the overnight Treasury futures market in Chicago started collapsing. Not slowly declining, not drifting lower, collapsing. By 11:15 p.m., the 10-year Treasury yield had spiked 42 basis points. For those who don't trade bonds, that's like watching a building explode. That doesn't happen during normal market conditions. That happens when someone big is dumping massive amounts of bonds and nobody wants to buy them. But here's what makes this truly terrifying. The algorithms detected the selling before any human analyst even read the statement. The computers knew Japan was selling before CNBC, before Bloomberg, before any financial expert could explain what was happening. And that tells you something critical. This isn't a planned, orderly reduction. This is panic selling. This is desperation. Why Japan is the biggest domino. Now, before I explain why Japan is being forced to do this, you need to understand just how big this is. Japan holds $1.1 trillion in US Treasury bonds as of December 2025. That makes them the largest foreign holder of American debt, bigger than China. China has been slowly selling since 2022, and they're down to about $800 billion. But Japan kept buying. Japan kept supporting our debt auctions. Japan kept recycling their trade surplus into our bonds. Why? Because that was the deal. The unspoken agreement that's held the global financial system together since 1945. We defend Japan militarily. We station our Navy in the Pacific to protect their shipping routes. We guarantee their security. And in return, they fund our deficit. They buy our debt. They support the dollar. It's been working for almost 80 years, until now. Because that deal just got ripped up and thrown in the garbage. And when I show you why, you're going to understand that this isn't about Japan being aggressive or hostile. This is about Japan trying not to die. But their survival might cost us everything. The currency crisis nobody saw coming. Here's what's actually happening to Japan right now and why it's forcing them to sell our debt. The Japanese yen is collapsing. And I don't mean declining slowly, I mean in absolute freefall. Let me show you the numbers because they're shocking. In January 2021, one US dollar bought you 103 yen. That's normal. That's stable. That's what currencies do when everything's working properly. By October 2022, $1 bought you 152 yen. That's a 47% collapse in less than 2 years. The Bank of Japan tried to stop it. They spent $62 billion in September 2022 trying to defend their currency. It didn't work. The yen kept falling. By December 2024, we were back at 157 yen per dollar. And now in January 2026, we just hit 161. That's a new multi-decade low. That's a currency in crisis mode. Now here's why this matters and why it forces Japan to sell our debt. Japan imports everything. Oil, natural gas, food, raw materials. All of it priced in US dollars. When the yen collapses like this, their import costs explode. A shipment of oil that cost 100 billion yen last year now costs 150 billion yen. Same oil, same amount. 50% more expensive. That creates instant inflation Prices for everything in Japan skyrocket. Food gets more expensive. Energy gets more expensive. Everything imported gets more expensive. And Japanese people start panicking. So the Bank of Japan has exactly two choices. Choice one, raise interest rates to make the yen more attractive and defend the currency. Choice two, sell their dollar reserves, use that money to buy yen, and prop up the exchange rate. Sounds simple, right? Just pick one. But here's the trap, and this is where it gets ugly. If Japan raises interest rates, they collapse their own economy. Why? Because Japan's debt to GDP ratio is 264%. That's the highest in the developed world. Their government cannot afford higher interest rates. It would trigger a death spiral where they can't pay their debts, which forces them to print more money, which makes inflation worse, which requires even higher rates. It's a doom loop, so they can't raise rates, which means they have to choose option two, sell dollars, dump US Treasury bonds, use that money to buy yen and support their currency. And that's exactly what's happening right now. But here's what nobody's explaining. When Japan sells US Treasuries, they're not just selling bonds. They're pulling collateral out of the entire global financial system. The collateral crisis that breaks everything. This is the part that's going to get really technical, but I need you to stay with me because this is where the real danger is. Japan doesn't just hold treasury bonds in a vault somewhere. They use those bonds as collateral in something called the repo market. Think of the repo market as the plumbing of the global financial system. It's how banks and institutions borrow money overnight to keep operations running. When Japan sells treasuries, they're removing collateral from the system. And when collateral disappears, the entire lending market starts to freeze up. The algorithms detect this immediately. They see the collateral being withdrawn. They see liquidity drying up. And they start front-running the next seller. They short treasury futures. They buy puts. They position for prices to fall. This creates what's called a gamma flip, where the market makers who sold those options have to hedge by selling more bonds, which pushes prices down further, which triggers more selling. It's a feedback loop that accelerates until something breaks, and we're already seeing evidence this is happening. The smoking gun in the auction data. Let me show you the data that proves this is already underway. On January 3rd, 2026, the US Treasury held a standard 10-year note auction. They were selling $17 billion in bonds. Nothing unusual. But look at what happened. The bid-to-cover ratio came in at 218. That means for every dollar of bonds being sold, there were only $218 of bids. That's weak. The 12-month average is 2.4. We're below average. But here's the really scary part. Indirect bidders, which is mostly foreign central banks like Japan, only participated at 54%. That's the lowest since March 2020 during the COVID panic. Translation, foreign buyers are stepping away from our debt auctions. So who's buying? The primary dealers, the big banks that are required by law to buy whatever doesn't get sold. And those banks don't want to hold long-term treasury bonds in a rising rate environment. So they immediately hedge by shorting the futures market. And that shorting pressure feeds into the algorithmic selling I just explained. It's a doom loop, and it's already started. The China comparison that makes this worse. Now let me contrast what Japan's doing with what China did, because this shows you why Japan's situation is so much more dangerous. China has been reducing their treasury holdings since 2022. They went from 1.1 trillion down to 800 billion. But they did it slowly over 3 years. They were strategic. They were calculated. They reinvested the money into gold, commodities, and infrastructure projects around the world. Japan doesn't have that luxury. Japan is being forced to sell in size right now in a compressed time frame because their currency is collapsing in real time. This isn't strategic. This is a financial emergency. And here's the question that should terrify every American. If Japan sells $1.2 trillion in treasuries over the next 12 months, who's going to buy them? The Federal Reserve is not buying. They're doing quantitative tightening, which means they're actually shrinking their balance sheet. The European Central Bank is not buying. They have their own debt crisis with Italian bond spreads blowing out. China is not buying. They're selling. So who's left? Domestic buyers, U.S. pension funds, U.S. insurance companies, regular American investors. And they will only buy if the yield is high enough to make it worth the risk. That means yields have to go higher, a lot higher. And when yields go higher, bond prices go lower. And when bond prices go lower, everyone holding bonds loses money. Your bond funds, your 401k if it's in bonds, your pension fund, all of it takes a hit. But it gets worse, because rising yields don't just affect bonds. The domino effect on your life. Let me walk you through exactly how Japan's treasury selling affects your actual life, even if you've never bought a bond. Your mortgage. Treasury yields set the baseline for mortgage rates. If the 10-year treasury yield spikes from 4.5% to 5.5% or 6%, mortgage rates follow. We could be looking at 8% mortgage rates within months. If you're planning to buy a house, that dream just got a lot more expensive. If you're planning to refinance, forget it. Your credit card rates are tied to Treasury yields plus a spread. When Treasury yields spike, credit card rates spike. If you're carrying a balance, your interest costs just went up. Your job. When borrowing costs increase, companies cut spending. They delay expansions. They freeze hiring. They lay off workers. Rising yields slow down the entire economy. Recession risk goes up dramatically. Your retirement. If you're retired and living off a portfolio that includes bonds, you just took a major hit. Bond prices falling means your account value is falling. Your retirement income stream is getting squeezed. Your investments. When Treasury yields spike, stocks usually fall. Why? Because higher yields mean higher borrowing costs for companies, which means lower profits. And it means investors can get decent returns from safe bonds, so they sell stocks to buy bonds. Your stock portfolio gets hit from both sides. This is why Japan's selling matters to every single American, whether you pay attention to financial markets or not. The Fed's impossible choice. Now, here's where this situation becomes truly catastrophic. The Federal Reserve is watching this happen in real time, and they have a decision to make, a choice with no good options. Option 1, let yields run higher, let the market find its natural level. But if they do that, mortgage rates hit 8%, corporate borrowing costs explode, zombie companies that have survived on cheap debt start defaulting, the credit market freezes, and the stock market crashes. We're talking potential depression-level economic damage. Option 2, step in and buy treasuries to cap yields, restart quantitative easing, print money to absorb Japan's selling. But if they do that, they're admitting inflation is not under control. They're admitting they can't let markets function normally. The dollar loses credibility. Gold explodes higher. Bitcoin explodes higher. Inflation expectations become unanchored. And foreign holders accelerate their exit because they know the Fed is just going to print its way out of the problem. Either choice is catastrophic. Either choice leads to massive wealth destruction for average Americans. This is what's called being trapped. And the Fed is trapped right now. The 4 phases of collapse. Let me walk you through exactly how this escalates over the coming months, because this isn't a one-day event. This is a process. And understanding the timeline helps you prepare. Phase 1, quiet selling. We're here now. Japan reduces their treasury holdings by $50 to $100 billion over the next quarter. The market absorbs it, but yields drift higher. The media mostly ignores it. People think it's just normal market volatility. Phase 2, accelerated dump, coming in 2 to 3 months. Japan dumps $200 billion in a single month because the yen crisis intensifies. Yields spike dramatically. The algorithms panic. Volatility explodes. The VX goes from 15 to 35. The media covers it but downplays the severity. Phase 3, contagion, coming in 4 to 6 months. Other foreign holders see what's happening and join the selling. South Korea reduces their position. Taiwan reduces their position. The UK reduces their position. Now you have $500 billion in coordinated foreign selling. The treasury market breaks. Yields on the 10-year hit 5.5%. Mortgage rates hit 8.5%. The housing market freezes. The credit market freezes. Phase 4, Fed intervention, coming in 6 to 12 months. The Fed is forced to restart QE and buy treasuries to prevent total systemic collapse. They admit the treasury market cannot function without central bank support. That's when the dollar loses its reserve currency status, not through some formal announcement, but through market action. Foreign central banks stop recycling their surpluses into treasuries. They buy gold, they buy commodities, they build alternative payment systems to bypass the dollar. And the US is left funding a $2 trillion deficit with domestic buyers who demand higher and higher yields. That's debt monetization. That's the Weimar playbook. That's the end game for every empire that prints money to fund its deficits. What the smart money is doing right now. Now, let me show you what the people who understand this are actually doing with their money, because this is the part that retail investors never see. Hedge funds. They're shorting long-duration treasury bonds. They're buying TBT, which is a fund that goes up when bond prices go down. They're buying put options on bond ETFs. They're positioning for yields to spike and bond prices to collapse. Sovereign wealth funds. They're rotating out of treasuries and into gold. Central bank gold purchases hit record levels in 2023 and 2024, over 1,000 metric tons per year. That's double the historical average. They're not buying gold because they love shiny metal. They're buying gold because they don't trust the dollar anymore. The ultra-wealthy. They're buying physical precious metals, not paper contracts, not ETFs, physical gold and silver that they can hold in their hands or store in private vaults. And because they know that when this crisis goes kinetic, The difference between owning paper claims and owning physical metal becomes life-changing. Family offices, they're diversifying into hard assets, farmland, energy, commodities, real estate and strategic locations, anything that holds value when currency loses credibility. These people aren't panicking, they're preparing, and you should be too. Your 72-hour action plan. All right, let's cut through everything and talk about what you actually need to do in the next 72 hours. Step 1, assess your bond exposure. Look at your 401k, your IRA, your brokerage accounts. How much is in bond funds? If you're in a target date retirement fund, you probably have significant bond exposure. Those bonds are going to lose value as yields rise. Consider reducing your bond allocation significantly. Step 2, get some physical precious metals. I'm not saying put your entire life savings into gold and silver, but having 5 to 10% of your net worth in physical precious metals makes sense right now. Not ETFs, physical metal. Go to a reputable dealer this week and buy some silver coins or small gold bars. Keep them somewhere safe. Step 3, build cash reserves. When this crisis accelerates, you want liquidity. You want the ability to act. Keep 3 to 6 months of expenses in cash or money market funds. Don't be fully invested when a major dislocation is coming. Step 4, prepare for higher costs. If you're planning any major purchases, a car, home improvements, anything that requires financing, do it now before rates spike further. Lock in current rates if you can. Step 5, document everything. Take screenshots of your account balances. Print out statements. When markets get chaotic, you want records of what you owned and what it was worth. The hard truth. Nobody wants to say. Here's what I need you to understand. This situation with Japan is not going to resolve peacefully. It's not going to quietly go away. The math doesn't work. The incentives don't align. The structural problems are too big. Japan has to sell US debt to defend their currency. When they sell, yields spike. When yields spike, other holders get nervous and start selling. When everyone's selling, the market breaks. When the market breaks, the Fed has to intervene. When the Fed intervenes by printing money, the dollar loses credibility. When the dollar loses credibility, more foreign holders sell. It's a doom loop, and we're in the early stages right now. The mainstream media is going to tell you everything's fine. They're going to say this is just normal volatility. They're going to say the Fed has everything under control. They're going to tell you to stay calm and keep buying stocks. Don't listen to them. The people giving you that advice are either ignorant of what's actually happening, or they have an interest in keeping you calm while they position themselves. You need to be ahead of this. You need to prepare now, because when phase 3 and phase 4 hit, when the real panic starts, it will be too late to protect yourself. The banks will have lines out the door. Precious metals dealers will be sold out. Your broker's website will be crashing from traffic. You won't be able to get your money out fast enough. The time to act is now, while everyone else is still asleep, while the media is still downplaying this, while you still have time. The signal this sends to the world. Let me end with this, because it's the most important point. Japan selling $1.2 trillion in US Treasuries isn't just about the bonds. It's about the signal it sends to every other country holding our debt. For 80 years, the deal was hold US Treasuries because they're safe, because America is stable, because the dollar is the reserve currency, because even if things get rocky, America's allies will support the system. Japan just broke that deal, not because they wanted to, but because they had to choose between supporting America's debt market and saving their own currency. And they chose survival. What does that tell China? What does that tell Saudi Arabia? What does that tell every other foreign holder? It tells them the Treasury market is not the safe haven anymore. It tells them that US fiscal policy is out of control. It tells them that the Federal Reserve is trapped between inflation and deflation with no good options. And most importantly, it tells them to start planning their exit. When allies become sellers, enemies become aggressive. When the reserve currency loses support, alternatives emerge. When the system breaks, chaos follows. We're watching the beginning of the end of dollar dominance. And it started with Japan hitting the global kill switch. The question is, are you going to be prepared for what comes next? Subscribe to this channel, turn on notifications, share this video with everyone who needs to know, because the mainstream media isn't going to warn you until it's too late. The kill switch has been activated, the countdown has started, the crisis is coming. What you do in the next 72 hours could determine whether you survive what's coming or get destroyed by it. The choice is yours.